right. Good afternoon. Hopefully, everybody can hear me. We got a bunch to go over from things that have occurred over the last 2 days. One of them, Needs 55, said Canada lowered the lending rate by a quarter percent today. Will the U.S. be sooner than September? Thoughts? I think they could be. I think they should be earlier than September. I think right now we're looking with September at a rate of about 70% likelihood that we drop by one, if not 2 basis points. So it's going to be interesting. I do think we should. Europe is talking about lowering rates, but we're also seeing some other economic data that's interesting, and we're going to go over some of that. We'll probably start with some of the economic data here within my, the tradingeconomics.com website. And then I'm going to jump over into some of the bookmarks that I've made over the last 2 days in regard to a slew of things, mostly centered around macro economics, Bitcoin, and Tesla, since that makes up about 85% of my positioning. So, without further ado, let's rock and roll and try and be as quick as we can. New car sales, abysmal. No shocker. Actually, you can't even go back that far because of the pandemic skewed this statistic really badly. Oh, wait, that's UK anyway. Let me go back. I got to straighten this up. Let me get rid of the UK. Nobody cares about the UK, at least not today. All right, let me get in here. Mortgage rates over 7%, slightly trending higher. Not a good number. It's freezing the entire market, and we'll look at that in a second. If we look actually, applications, I don't even like looking at because, again, it's just month over month, so it's showing percentages up and down. So we'll skip this, but you can see more visibly within the mortgage market index and also the refinance index that, we're looking back at levels seen in the mid 90s, so 30 years ago for mortgage activity, whether it's refi or just, buying a house. That's not great for people that are in real estate, and it means that they're suffering greatly. Where I live, we're pretty insulated here in the Midwest, at least in the region I'm in. But again, we need to see rates come down. We've got lots of reasons for that to happen, and we'll talk about them in a second. ADP employment data. So this is interesting, and I've got some other slides in regard to this too. So it actually came in weaker than expected. We had a consensus of 175K, a forecast 170, and then we actually saw 152K. So we've got some weakness in the mortgage or in the employment sector, which is good. We actually want to see some weakness there. We don't want to see too much strength. We don't want to see wage inflation. So seeing an employment sector that isn't falling apart, but that's stabilized and isn't gaining strength is probably a positive right now. I keep DCAing into DLO, keeps getting lower. What's the floor as far as technicals go? Good question. I'll probably take a look at that in a second, Michael. And ETH trying to hit 4K. It's probably going to. I mean, Bitcoin hit almost 72. Huge liquidation in that zone, so that should be fun too. But yeah, so I think employment is stable. I don't think it's weakening too much, but it's also not strengthening as far as wages going up, which is good. Now, some other notable events. I don't even think I posted about these today, but the S&P Global Composite Services, ISM Services, all these things, let's just rock and roll through them. So Global Composite, PMI, if we look at this, they've had a massive uptick for May. Again, anything above 50 is an expansion territory. We're going up a lot. This is not recessionary. This is not something that normally points towards recession. So this level of strength, and it's across everything. We'll see more in a second here. I'm going to read a little bit of it. It says PMI rose to 55 or 54.5 in May of 2024, up sharply from 51.3 in April, and above preliminary estimate of 54.4. This marks the strongest increase in business activity since April of 2022. So we're looking at the strongest increase in business activity in over 2 years. As growth accelerated in both manufacturing, PMI went 51.3 versus 50.3 in April, and services PMI 54.8 versus 51.3. So services, again, coming in hot, or good, strong. But again, we're seeing things, though, where we've got some data I'll show you in a second where it shows that prices are stabilizing. So this is all good. Yeah, hit the like if you could. Appreciate it. It says companies boosted output due to renewed rise in new orders following a slight decline in April, and a new export business saw a marginal increase. Employment levels remained steady overall, with increased manufacturing jobs offset by lower staffing and services. Input costs and selling price inflation both accelerated. Business confidence improved slightly with companies optimistic about future growth. So again, we've got metrics that are in expansion, and we've got companies that are optimistic about future growth. And we saw some of that just on Monday in regard to some of the hiring that was occurring, and the fact that we were looking at people hiring, even though optimism was very low, which is kind of funny. So, but I think this is more real. Again, ISM Services backs this data up too from the S&P Global, and the PMI for that is 53.8 versus consensus of 50.8 and forecast of 51. So that was another strong level. Again, it looks like we're seeing a big decrease. It looks like the economy is going to roll over and fall apart. And what does it do? It looks like it bounces again. If anything, this looks like a wedge that's getting ready to break higher. And you got to love that. That's the kind of pattern you want to see. Let me just adjust something real quick here so I can see better. That's the kind of pattern you want to see. And we've got a higher high here too, if you look over from what occurred in January. So this is kind of a breakout pattern. It's a good thing. We'll see if there's revisions later, but this data looks good. And again, services, business activity also looks ridiculous. So let me just click into this. We had over a 60 read. So we had a consensus of 53, a forecast of 52.3, and an actual of 61.2 for the ISM Business Activity Index. It says, let me read through it here too. It says it's 10.3 percentage points higher than the 50.9 percent recorded in April. It compares with market expectations of 53. ISM non-manufacturing business activity. All right, some of that's redundant, but let's just broaden this out here and look at this range. So look at where we are. This is like one of the highest levels we've seen in what's heading on 2.5 years. So this is nothing small by any means. And my friend Caleb posted something earlier about recessions, and he said, hey guys, we normally don't see massive growth and expansion and things like, PMI services, manufacturing, just all these different areas. You don't normally see, just massive amounts of growth right before a recession. So again, I strongly believe that if we lower rates, we're going to see something where we start to see real estate taking off. Again, depressed levels that we haven't seen. Again, we didn't look at the refinance index, but if we go back here and look at that too on Max, I mean, look at where this thing is. Let me just zoom in here, give you a better view. Look at where this thing is compared to where it's been. Like, we're at 2000 levels. We're not like early mid 90s. That would be really bad for refinancing if we were that far. But like, we're really low in and have been at a depressed state for a very long period of time. So all this stuff wants to pop. It's just looking for an opportunity to. And I've had some arguments back and forth with people about whether or not rates would have any effect at all, because some people are locked in at 2 and 3%. I say they do, because when you've had a market that's been frozen for 2 years and people are just looking for a good price, right? Like there are some people, oh, Kelly, you sweetie, Self-Made Masteries in the house. Thank you very much for joining. So if you've seen a sector that's been frozen for like 2 years, and you need to buy a house, like some people have to move, some people want to upgrade, some people want, like, there's people that are just waiting for the right time and an opportunity to do this. So what they're looking for is prices to drop. And when they start to see a hint of rates coming down, and in my area, I've already seen, especially in the higher end market, like the multi-million-dollar space where I'm looking, if you want to buy a $2 million home here, there are not a lot of buyers right now, especially at 7% interest rates. There's even people that are like, hey, I'll finance it for 4 if you buy my $2.5 million house. So there's people that want to sell these bigger homes. They can't do it, but people will buy those when they believe that they're at a time where the market's going to start to unfreeze. Because if you're in an area like I am, where you're starting to see prices come down, you're going to go, okay, this is my opportunity to get this place that I want before the market starts to get too hot, before people start getting interested in real estate again, and before they start buying. And so you're going to buy that place, and you're going to do that the second you see rates starting to come down, because you're going to know that once they start coming down, they're not going to fucking stop. So that's my take on rates, and I do believe that they'll have impact because everybody wants them to. Everybody wants them to. If you're in real estate, you're begging for things to move, and you will pitch that shit like crazy. You'll be calling up everybody and saying, now is your time to buy. This is your opportunity. You can always refinance later. And if you don't believe me, you must not remember what it was like back in 2005, 6, 7, before the great financial crisis. There was plenty of that pitch going on about being able to refi as people were in adjustable rate mortgages that were shit. And they thought in that case, they thought they were going to have better opportunities than they really were. Anyway, all right, let's move on. So the S&P Global, ISM services, everything is hot. Employment, again, 47.1. That was consensus was 47.2. Forecast was 48, so that was a little bit lower, but that's good, right? We don't want to see anything crazy there. New orders, 54.1 versus 53.2 on consensus and 53 for forecast. So that's excellent too. We want to see that. We want to see that people are looking towards the future with order, or that they're getting orders for the future, and that they've got some demand coming up ahead of us. And then service prices, we were at 58.1, which is good because the consensus was 59 and 60. So we're actually seeing a lowering of expectations. Now, with all of the stuff that's happening, over the last really week or two, we're finally starting to see a pickup. Like the September 18th, CME target for probabilities for the Fed cutting rates 1 to 2 bips. Again, it's almost 70% now. So the chance of getting a rate cut in September, I think, is pretty locked in. And even in July, it's starting to come back alive now with an almost 20% chance of a cut. And that's what I would love to see. I would love to see that happen. Yeah, Disease Kodak. Kelly's in the house. Isn't that awesome? All right. So my bookmarks are all FUBARD today. So I'm going to actually just start at the top and work my way down. X has some weird shit going on where when I'm bookmarking things into different folders, it will be right for a while, and then it like resorts to some crazy fucking order that I can't make any sense of. And there's no way to sort them by like most recent. So it all of a sudden goes back to bookmarks I've created like a month ago. So we're starting at the top, no particular order. We're going to be focused on Tesla and Elon Musk. We're going to roll through a bunch of stuff here. Like I said, macro, economy, Bitcoin, Tesla, all of it. All right, so Elon said just 4 hours ago, he said FSD 12.4.1 releases today to Tesla employees. If that goes well, then it'll be released in a limited number to external customers this weekend. So we might actually see like some alpha FSD testers getting access this weekend that aren't employees, and maybe even some early betas. And this is the rest of what he says is pretty awesome in here. He says there are a massive number of changes to this build. It should arguably be called 13, but we're sticking to 12. Lol. 2 other versions are in earlier stages of testing, 12.5 and 12.6, which could be called 14 and 15. And the reason he's saying this line right here is just amazing. It says we're starting to get to the point where once known bugs are fixed, it will take over a year of driving to get even one intervention. So with 12.41, we can expect the nag to go away. So when you're driving around with FSD, as long as you're like, don't have your eyes closed, this thing won't be bothering you, and you won't have to touch the wheel all the time. And we're looking at improvements of 5 to 10x just for performance. And then we're talking about in the not too distant future. And again, what he's saying here with the version 13, 14, 15, and what they should be, he's telegraphing to us that we're getting ready to see exponential change. And it's going to happen really quickly. And what would just be, a minor change or revision is now going to be like a completely new version, because the amount of change is just so great and so quick. And you got to be excited about this, guys. This is where all the margin comes from. Autonomy is just the step of like the first step into robotics, and all these things feed off of each other. And people are starting to be willing to pay $99 a month. I personally, I've got FSD on my Cybertruck, or will. I'm waiting for that to come to the Cybertruck. It hasn't yet. And then at the same time, I've got it on my Model Y, and the Y. Now I don't drive it much. I got 2,000 over, 2,500 on the Cybertruck in the last 2 weeks, but if I did, that's pretty much what I would do. I would probably listen to YouTube videos and listen to Audible and go where I need to go, and at the same time let the car do all the work. And if I was a salesperson, I wouldn't even think about it. I would just pay the $99 a month if I had to travel a lot. And so this is the future. This is where all the margins are going to be. It's not so much about producing mass amounts of cars. It's about making tons of fucking money from the cars that you already have out there. I pledge allegiance to Jesse's channel. Kelly, you're a sweetie. Don't get Met jealous. Come on. All right. Open Skies. She posted something about Goldman Sachs I wanted to talk about. It says, let's just read it. It's a Bloomberg post. It says a flood of cash from passive equity allocations will pour into the stock market in early July, setting up continuing rally through the early summer, according to Goldman Sachs trading desk. It says, quote, new quarter Q3, new half 2H. This is when a wall of money comes into the equity market quickly, says Scott Rubner. Goldman's Global Market Division Managing Director and Tactical Specialist wrote in a note to clients Wednesday, in addition, share prices should benefit from strong seasonal trends and rising engagement from retail investors. I'm seeing a reemergence of retail traders during the summer. They tend to come around in July, he wrote. I agree with that. I think the sell in May thing is stupid. I'll show you a slide in regard to that in a little bit too. Also, a really cool data point here. Since 1928, the first 15 days of July have been the best 2-week trading period of the year for equities, and they tend to fade after July 7th, according to Rubner. The S&P index has been positive for 9 straight Julys, posting an average return of 3.7%. The NASDAQ 100 index has an even better record, posting gains in 16 straight Julys, with an average return of 4.6, he noted. So what we could see here in the very near future is a strong July in tech. And gosh, we're seeing a strong June in tech right now too. And I think that's only going to get better. We're looking at an election year, which historically is a time when markets perform really well. And after the Bitcoin halving, markets perform really well. We've got global liquidity picking up. We're hitting new highs in it. There's just a lot of things that are getting better in the very near future, and you need to keep an eye on them. All right, let me see. Don't forget Tesla Energy. I believe this is also going to be huge. It is. There's so many different asymmetric opportunities right now between, like, not just Tesla. I mean, Tesla has a bunch of them. They have like 4 different asymmetric opportunities right in front of them right now. But, you know, Bitcoin is an asymmetric opportunity, and then you look at genomics, and just there's so much. I think there will be an AI bubble in the future. I know people might be a little worried about that right now. Let me hop over here real quick. So if we look at the stock market heat index, you can see NVIDIA closed up 5% today. There's a decent amount of green on the screen. Some of the companies I think really deserve it, like Tesla, aren't, but whatever. There's other good companies that are. Palantir did great. A bunch in the, chip sector and tech sector. But people are going to start screaming about an AI bubble for NVIDIA and all these others. And I do believe that we will have an AI bubble. But I would say in comparison, if we were looking at a real estate bubble for the great financial crisis, or we were looking at, the dot-com bubble of 2000, I'd say we're like 2 years early, maybe 3 on that process. So I do believe we'll have a bubble, but I don't think it's now. I think it's coming. I think it's building, and I think it could get quite large. Where people can't separate shitty companies from real ones. So I do think that we'll have one, but I don't think we're having it now. I think there's a lot of opportunity right now. Bitcoin Magazine, just in, $6 billion financial services company Unchained releases new Bitcoin commercial. Sleep soundly on a Bitcoin standard. So this person is just seeing, I'm not going to play this because I got tagged yesterday because of some stupid fucking song in one of the Bitcoin videos. So I'm just going to leave it silent, but there's a lot of people that are thinking about stuff like this. They're seeing nothing but negative, horrible fucking headlines all the time about how the U.S. is indebted, true. How we can't sustain it, true. How the world is pretty much that way, also true. And how they need an alternative where they're not getting screwed, where people can't print their money away. And I think this is going to resonate as people realize over and over and over again that these are real concerns and they need to think about them. And it might not be out to the masses yet, but it will be eventually. Now, as we said earlier, to whoever was talking in chat, the Bank of Canada cut its policy rate by 25 bips, and they indicated that they're ready to do more. Now, you got to remember the European Union is looking to do this too. So we already have, and then China has been trying to provide massive amounts of liquidity. It's not enough. They're still fucked. But liquidity and loosening is starting all around the world. During the time of an almost 2-year period where we've had markets artificially suppressed, everybody's waiting for a crash. But guys, Tesla was down 75% Meta was down 75% Palantir was down like 80 something. PayPal was down like 80 something. SoFi was down 80 something. There's a ton of good companies, solid companies that already got fucked. We've already seen a massive downturn. Could we have another one? Sure, but I don't think we're going to have it when the global liquidity cycle that goes back to the 50s indicates that we still have another 2 years of expansion, and then everything else in the macro world lines up with that. With all the governments around the world, you got to realize. I say this all the time, and I feel like a broken drum, but 2008 changed the world when we did something remarkable. We printed almost like a huge amount, 800 billion or 750 billion dollars, to save the U.S. economy and make it to where banks could open up the next Monday. That was just such a crazy thing, and it blew everybody's fucking mind. Nowadays, that's just like nothing. That's like a month. So we don't even care. That means nothing. And if you think that is sustainable, you're very confused. Now, don't get me wrong. It could be if AI, autonomy, and robotics and Bitcoin, if we embrace all these technologies and help foster technology and don't get in the way of it by big government making decisions and trying to push things like fucking hydrogen and bullshit. If we can use common sense as a country and embrace crypto and embrace these things instead of not even talking about companies like Tesla and ignoring them and fighting, SpaceX and everything else that Elon represents because you don't like his politics, and then ignoring things like Bitcoin and then trying to get rid of them. Like if we don't do that road and we do the right road, we could still be very prosperous and the number one nation in the world. And I think the world reserve currency for a decade, maybe still, while things slowly change. But we got to choose the right path, and I think we're doing it. I'm an optimist though, so I think optimists make a lot more money than pessimists do. Bitcoin Archive. So Bitcoin ETFs took $888 million yesterday, the second biggest day of flows since launching. Look at this. This is huge. This is a big deal. This is signal. Back to Tesla. 8 days until the Tesla shareholder meeting. This is very fucking important. This shareholder meeting, thanks to people like Alexandra Boomer Mama. I love that lady so much. She looks cute in her little red glasses. She's great. She's almost single-handedly organizing and helping push people to be able to vote the right way for the votes that are coming up. And there was a great video today, too, just going through all of that she was on. I don't remember I think it was Brighter with Herbert channel. It was really great. Like they're doing everything in their power to be able to open up these markets around the world to make it to where people are able to vote and do the right thing for Elon. And if it does pass and he gets his pay package, I don't know so much. We'll see about the relocation for corporate to Texas. It's going to be very, very possibly due to her and her own actions, which I think is fucking amazing. So remember her and what she's done for this company, because it's important. And please, if you haven't, vote yes on that pay package. You don't make agreements with people and then backtrack on them and then say that you're not going to fucking pay somebody for the work they've done, especially when they can't even cash that shit out for another 5 years. Keep Elon incentivized. That's just the right fucking thing to do. I don't even care if it makes it to where we make more money in the future. It's just the right fucking thing to do. And that's what we need to do as a country. We need to do the right thing. We need to make the right decisions. We don't need to tell future entrepreneurs that at any point they could be fucked with whatever they're doing, even if everybody agreed to it and they did everything they said they were going to do. That is not the fucking world we want to live in. We want to live in one where capitalism reigns and markets are free and people get lower prices and better goods. We don't want to live in a world like that, where people's political agendas can decide what happens to people that are successful and hardworking and do way more than they ever will in their lifetime. Anyway, all right, Eric Balcanunis. He's great. He's my ETF guy. He said, sell in May? No, I don't think I will, said ETF investors who plowed $58 billion into equity ETFs, a record for the month. And ESP big for an election year. Fixed income, no slouch, taking in 27 billion. It's the biggest month over a year. Total ETF flows year to date, $315 billion. So yeah, the sell in May and go away. I don't even know why that has any relevance anymore. Bitcoin Magazine, just in, Human Rights Foundation donates 10 BTC worth of $708,000 to fund 13 world Bitcoin development and projects. Again, Bitcoin is becoming intertwined into everything. You have to realize this. It's very, very important. The dollar index, I'm going to show, we'll look at some graphs here in a little bit on some of the things that are playing out and how they're doing. This is still breaking down. It looks good. Maybe I'll just pop over there for a second. Where the fuck is my dollar? Where my dollar at? Dollar. Need to figure out. I don't do this enough anymore. I don't remember where anything is. All right, there we go. Boom. Dollar. So the dollar today looked like it was going to gain strength, and it didn't really. It closed pretty flat, up 0.15%. And that if you look here, this still looks like a double top right here, and it looks weak. And we'll see where it plays out. We could find a bounce in this. We do have some divergence on the MACD down here that's forming, and on the RSI as well. I don't know. Maybe we end up going up on this. Either way, I'm not too worried about it. I think we're just going to chop for a while. I think the bond market's screaming that too. All right, I already showed you this. It's just the 70% chance of a rate cut in September. Let's move on. Ron Barron, this is a good one to watch. It's just Ron. Ron is such a great guy. He's just literally talking about why we should give Musk his money. It's well worth checking out. Dan posted this one. So the Prince of Monaco, Albert II, standing next to the Cybertruck. This is like such a huge thing. Symbolically, I mean, this guy is like excited and taking pictures with the Cybertruck. Monaco is like one of the richest places on earth. These people see supercars like it's nothing. It means nothing to them, but they're still celebrating the Cybertruck. And I don't know. That's just, there's so much positive advertising that's coming from that. I think it's being discounted. This is me shitting on Ross Gerber, I think. Yeah, we could skip that one. Ross is an idiot. He makes Gordon Johnson look like a good guy. Let's move on. That shouldn't even be in here. Tesla achieved 119,000 sales in Europe for the first 5 months of the year. This is 13% lower than last year for the same period. So again, we're seeing a slowdown in the auto sector. Pretty normal when you have really high rates, especially with all the headlines telling people not to buy EVs. I mean, that's essentially what they are, right? Everybody's saying right now, like, oh, hybrids are the way to go. It's not EVs. Don't do EVs. And then all of the major manufacturers outside of Tesla in the United States are backtracking on their EV programs. Even Ford, who I love, Farley, he's a good dude. But you know, these guys are backtracking on it because they couldn't sell theirs. So they're trying to change the narrative to, well, nobody wants EVs. And the actuality is nobody wants shitty EVs. They just want Teslas. So, and again, Tesla has taken a hit. They've definitely taken a hit. These numbers show that they're taking a hit because of these narratives, because they're being told that Teslas aren't good along with all the other EVs. And that's just anybody who owns it. You know, Kelly's got a rose gold, beautiful looking Model 3 that she picked up. I think it was the Highland edition, right? I'm pretty sure. You tell us, Kelly. And it's a beautiful fucking car. And once you drive one of these and you look at like a regular ICE car, it's not comparable. It's just not in any fucking way. So remember the truth. The narratives will come and go. The truth will end up lasting. And it will be the thing that matters in the end when the narratives wear off. Chris K said BlackRock seeded their Bitcoin ETF with $100K before launch. BlackRock is seeding the Ethereum ETF with $10 million before launch. It's about to get fun. I do think that's interesting, but there's weird stuff going on with Ethereum too. I don't talk about it too much anymore. I do think I have like almost 100K in Ethereum, but there's one thing. In the last 30 days, you look here, it's become inflationary again. And so one of the big benefits for Ethereum was that it was becoming disinflationary. But as of recent, that's turning around and starting to pop higher. You can see here. So we're starting to see an increase, and the burn isn't keeping up. And so I don't know. It's going to be interesting. You definitely have BlackRock pushing the narrative that they're going to be tokenizing everything. And I do think there's reality in that. And it sounds like Ethereum will be the chosen one. So maybe there are good things to come for Ethereum. But I mean, I can tell you, I trust BlackRock about as far as I could throw him, even though I do think Larry Fink is spot on about his thoughts on Bitcoin as of late. Yep, Long Range Highland. It's a good one. Kelly, Dougie, have you actually seen it? It might surprise you. It looks beautiful. Her car looks beautiful, dude. You got to see a picture of it. I never would have thought rose gold anything, but she's got it like blacked out on the top and then it's rose gold on the bottom. It looks cool. Strong July in text. Do you think we see strong July for small caps as well? I think we could, Disease Kodak. I don't know if I hate to say like any of these things with a surety because I don't know. Most of this year hasn't played out the way I wanted it to. Otherwise, I'd be up a shit ton more like last year when I was up 700%. This year I'm down over 20. Maybe it's down over 25 right now or close to it. So I hate to say like, oh yeah, that's gonna happen. Because it just hasn't. And then, Tom's been on that boat too, talking about small caps bouncing, and it hasn't worked out so good for him either. But I do think I think it's coming. I think it's coming. I could still be wrong, but I think it's coming. Too flashy for Dougie Fresh 69. You got to name Dougie Fresh 69, and you don't want something that's too flashy. You said, all right, RJ, Jesse Palantir, if you have time, yeah, we'll look at that. Palantir is doing great. I've got a whole share, so I've been benefiting greatly from that. But I do think I think the company is a great company, and the people that are making a bunch of money off it, I'm happy for them. All right, I'm going to move on, rolling through bookmarks here. Almost 75% of the top 500 companies in the U.S. are projected to deliver gross margin expansion over the next year. So it shows mega caps, it shows large, it shows mid. Now, I don't know. I'd say it's going to be interesting to see what happens with this. This could be something where if they don't perform, then it's lower than expectations and we start to see a drop. I don't know. It just all depends. Again, we're seeing really awesome economic data. So if we continue to see that stuff, then we could just keep going up. And I think that's the most likely path right now, especially as rates start to come down and the real estate market starts to open up, the auto sector starts to open up, just a lot of things start to open up. As long as jobs aren't falling off a cliff, we're okay. That's the important part. If jobs start to really deteriorate badly, then we're looking at a downward spiral, which is something like what China is in, and they're in it fucking hard. All right, this is kind of redundant. I'm going to skip that one since we kind of already talked about it. We're watching a breakout of a 5-year wedge against liquidity, a literal first for Bitcoin. Expectations based on extrapolating from the past may underestimate. Yeah, so I don't even know what they're talking about here. Skipping that one. I don't know enough about how he's deriving liquidity to be able to speak to that one, so we're just taking that out. Sorry about that. Here's one thing I wanted to point out. It's not really about the economy, but I wanted to talk to it. It says, don't let politics decide whether or not you're invested in the markets. And it says, remember this, 1,000 invested in S&P 500 since Eisenhower's inauguration. Returns based on investing based on the president's party, 1953 to current. So this is over 70 years of time, almost 80. And it says only invested under a Democrat, you'd have $62,000, so a 62x return. Only invested under a Republican, you'd have a 27x return. Staying invested and ignoring who is in the White House, you'd have a massive fucking return. So just remember, don't let politics decide your investing strategy. Now, what might change politically for a particular investment based upon who's getting elected, that could have relevance, but don't just jump out of markets because it's like, oh, the Dems are in power, I'm getting the fuck out. Like, that doesn't always work out, and it doesn't work the other way either. Just focus on your investing and what you own and when to apply leverage and when to stay away from it. Ryan Detrick, I posted about him too. I love this guy. He's a pretty good balance of optimist and pessimist, but he gets a lot of interesting data points. He said overall construction was a tad weak last month, and it was. He said, but manufacturing construction and high-tech construction continues to soar because of the CHIPS Act. We've talked about this for a while. We're shoving tons of fucking money into this stuff. And so it's going to incentivize these sectors. And at a time where AI is taking off, I think tech is just going to continue to prosper. Now, the ADP data today was weak, as we said before, and I actually do believe ADP more than BLS. I just wanted to show this chart. It talks about manufacturing employment, and it shows that the ADP data is weakening where the BLS looks like it's still strong, or at least, moderating and staying flat for the last 3 months, 4 months, but I would tend to lean towards ADP. They're just better. It's a private company, and you're getting data directly from payrolls. So I would believe that as far as like the manufacturing sector continues to weaken. We're seeing that all around the world. China's a fucking mess. All right, so again, and this is just the ADP. This is another view of the ADP employment data. I think we kind of already covered that. Let me see. ADP wage growth for job stayers remains at 5% for the third straight month, with job switchers still getting a nice raise of 7.8%. So we're still seeing some people that are benefiting from jumping. So I'd like to not see that, but we'll see. What did you say, Dougie? You said I erased you raced motorcycles professionally for 10 years. My nickname was Dougie Fresh, and my number was 6. That's great. And you don't like rose gold because it's too flashy. Come on, man. You're a racer. All right. We did this one. Moving on. Oh, here's a good one from Ryan again. Love this guy. You have to follow him. He's a great dude. And plus, let me show you something real quick. Look at this. You got to love somebody who's got this sense of humor. He literally posted this on his profile pic. The dude is a rock star. Anyway, he said bankruptcies are running 40% below 2019 levels. Things aren't perfect, but if trouble was really coming, we'd expect to see it show here first. Again, I've been listening to people for well over a year and a half talking about how bankruptcies and the consumer can't spend anymore and all this stuff is just going to get fucking insane and foreclosures, and none of it's happening. So maybe they're not right. Again, you got to remember that 40% of people, over 40% of people outright own their homes in the United States. You got to remember that a lot of the others have rates that are really, really low. So there's stability that's provided from that. And they don't have to buy new cars. They can still do some spending. They can figure things out. We're not like countries in Europe or Australia that have all these adjustable rate mortgages. We got away from that in 2008 after the GFC. And so we're just, we're doing better than these places. And so it's important to remember that we're not seeing a lot of this. Now, the subprime market is different, but high grade quality markets are much, much better. If it was a supercar, I would approve. Hey man, it's practically a fucking supercar. She had the performance, it would probably beat a supercar. All right, let's see. Stakeholder. Yesterday, the FDIC reported 63 banks are near insolvency, and Bitcoin had its second biggest ETF day ever. Probably nothing. I mean, here's the thing: we're gonna print money and make sure that we take care of banks that need to be taken care of. So I'm not worried about that. But if we end up doing that, it does benefit Bitcoin. So the statement still holds to be true, whether the banking sector starts falling apart or not. The money printer will go burr. My buddy Seth Golden, he's got a Cybertruck, I guess, too. I broke my wiper on the Cybertruck. So evidently when you have a 4-foot wiper, don't make sure you use washer fluid with it. Because I was not doing that and just letting it drag, and it just fucking tore off. I got to say, though, the service group, they came, I literally submitted a ticket. In 2 days, they came and gave me a new one and installed it. They even filled up my washer fluid. So you got to love fucking Tesla. These guys are great. And hopefully I don't break more shit. We'll see. I did jump on the back bed of the thing. That probably wasn't a good idea either. So let me see. All right. Anyway, Seth Golden. So he had some problems. The reason I brought that up, he had problems with his Cybertruck too. I think his motor broke. So he had the worst of it. At least I broke the wiper, not the motor. So he's using Rain-X, poor guy. Anyway, he says only other S&P 500 stock to double its market cap, weighting more quickly than NVIDIA from 2 to 4% was Cisco in 1999 and 2000. So you might think from that initial statement like, ooh, this is scary. This is the end of the world because Cisco was doing this stuff and then the dot-com bubble happened. But he said, here's the difference. Cisco's EBITDA margin was 22%. Today, NVIDIA's is 54%, more than 2x the expansion. And so, and we know this is very real, the growth that NVIDIA is seeing, because we've got Tesla saying they're probably going to spend $4 billion this year just buying their shit. Bro, how did he break the motor? I don't know. It's probably a defect. Whenever you buy a new car where there's less than 10,000 of them made, shit's going to break right and left. I think the important part is like when I broke my wiper, you know what they did? They took it with them. The tech took it with him. He goes, I'm going to need it. I got the pictures, but can I physically have it too? Because I might need to send it back so that they can take a look at it and try and figure out, where the weakness is. So that's what they're doing. they'll ramp slowly in the beginning. And I saw somebody, Troy Teslike, talking about how the Cybertruck isn't ramping. I think that's probably bullshit. If we looked at the Model 3 ramp, we would see probably a similar pace to what we're seeing here, if not better now, because the Model 3 ramp was a disaster. But when you're building something completely new, you're going to have defects. So you want to start the ramp slow. You want to figure out what those defects are. You want to be able to, you want to iteratively, as quickly as possible, make changes. Whether, the frame around the mid part of the wiper needs to be reinforced with a metal, that's just slightly stronger. Whatever you have to do, you're trying to analyze those things and figure out how to make those changes before you have a defect that could go out to 100,000 vehicles, right? That's the thing. There's a reason 99% of Tesla's recalls are software updates, because physically they do a great job iterating and adapting. And so I think that again, you're going to have broken shit in the beginning. That's my thought, Kelly. Anyway, so that was cool with the margin stuff, and I think that's telling a story about how NVIDIA is not in a bubble right now, and I'm not worried about it. I'm not invested in it, but I do think that I think it's probably got a ways to go. Again, Bitcoin News is talking about global liquidity. You can measure this in a number of ways. A clean way is just M2, or a basic way, I should say, and it's reached all-time highs. And I'm seeing the same kind of thing from Cross Border Capital, Michael Howell. He's talking about how he was actually talking about how in May, April and May, how we'd see a slowdown. And we did, and we saw the stock suffer from it. So he telegraphed that stuff early in advance, and now he's talking about expansion again, and that's what we want to see. And Vivek posted this. It just shows all these different countries around the world where Bitcoin has already hit an all-time high. So very, very important to realize it's not that this might happen. It's that it already is, and we're just playing catch up. All right, Ryan again, Mr. Positivity this week. They told us layoffs were spiking because the economy was tanking. Turns out layoffs are at their lowest level since December of 2022. So again, we're seeing strength in services and PMIs across multiple different metrics. And we're seeing prices starting to stabilize and come down. We're seeing countries in Europe and even Canada starting to realize that inflation is coming down hard and that they need to start incentivizing and loosening up markets. And then at the same time, we're seeing layoffs not being bad. So kind of cool. Tesla's fucking rock. Model Y is the best car I've ever owned. Dude, that's what I used to say all the time for like the last 3.5 years until I had the Cybertruck, and now that's the best one. Even though I do have people routinely try and fight me, even when I'm not wearing my muscle shirts. So I don't know what that's about, but anyway, so it's very divisive, but it gets so much fucking attention, and it's the best car I've ever owned. I love my fucking Cybertruck so much. I'm gonna keep that thing till the end of the time. That's my baby. Anyway, Coin Bureau. Oh, no, that's kind of the Bitcoin ETF, 888 million, 900 million inflow thing. We've seen that a few times. Let's skip it. Now, Eric Balkunas again said the first 2x Ether futures ETF, ETHU, launched today and did over 5 million in volume, which is great for a new launch, and more than all the Ethereum futures ETFs did combined on their first day, but still pretty microscopic versus anything Bitcoin. So all he's saying is we're starting to see the ETH markets open up too, but it's a drop in the bucket compared to Bitcoin, and I think that's going to continue to be the case. Mike Alfred. I do like this guy. I do have thoughts on Dojo. We can probably talk about that in a second too. Mike Alfred, he pointed out here, he said US Bitcoin ETFs are live. The Canadian Bitcoin ETFs are live. The European Bitcoin ETFs are live. The Hong Kong Bitcoin ETFs are live. The Australian Bitcoin ETFs are live. El Salvador is buying. MicroStrategy is buying. Zuckerberg and Bezos are buying. Worried about supply. He's fucking right. We should be. And Thailand just announced that they're going to be spinning up an ETF here too. And there's a lot going on right now, guys. We don't have enough supply. We have companies, not even MicroStrategy. We have Mr. 100, which is probably a nation state. We have people that are buying Bitcoin all the fucking time. And in some cases, it's like a company or one group that's buying the entire daily supply. If you're even remotely, I mean, you could be borderline retarded, but if you're okay with math and statistics, you realize that this is completely unsustainable. And there's some stuff I'm going to show you about gold, comparing gold to Bitcoin too, because I love shitting on gold. So we'll look at that in a little bit too. Real quickly though, I did want to have Tom Lee talking here about the S&P and his thoughts on it. So let's listen.
And once again, you're doing exactly what I tell you not to do, Tom, and that is giving a price target and a time frame. Never do both. Never do one or the other, but you're doing it again. So 50.
He's right. That's a bad idea. But Tom, man, he's got some balls, way more than you would think based upon it. His hair is looking a little more structured. So I think right now he's being fairly conservative. When his hair is combed really well, when it starts to get really nuts, that's when he's having a good time, and his estimates will get a little crazier. But I think he's being conservative right now, calling for a 4% increase.
5,500 on the S&P by the end of June. It's hard not to talk about that immediately. Based on, Tom, lower inflation.
That's right. I think there's a fundamental case, Joe, which is inflation is coming in softer than expected, and I think the job market is it's cooling but not weakening dramatically, and I think that's a good situation for equities. And I think that the sell-off in April actually hasn't really been fully recovered, and that's why we expected a rebound in May, but I think that carries over into June, and there's still $6 trillion of cash on the sidelines, and margin debt's still way below where it was in October 2021. So we know investors really aren't that long yet. So I think that comes together this month.
So he's saying there's tons of money on the sidelines. He's been saying that for a while. He's saying inflation is going lower. I've been saying that for a while, and so is he. And then at the same time, he's saying margin debt's low, so people aren't really highly levered, even though we're seeing, the GameStop meme shit. Look at the meme coins. Look at the top 100 meme coins. Another fucking dog, whatever the fuck Brett is. I don't know. What is Brett, guys? Look at that ugly piece of shit. I don't know what that is. We've got the frog over here. We've got, Uniswap. There's a bunch of things that are doing really good. Floki, Bonk. So much shit. I own some of the shit, but there's obviously retail interest in the market right now, even though we're not seeing all these leverage plays. There's still concern, still tons of money on the sidelines, and that's his point. And he thinks we're going up in June, which is funny because we're doing up pretty good so far right now in June. And then we also have Goldman Sachs, I said a little bit earlier, talking about how July is historically a great month too. So maybe we have a couple of months that are really interesting.
With a pretty surprisingly robust move higher.
It is a little bit longer than that crazy call you made. It was based on a week, Tom. I remember, and it worked out for you. You were right. So now at least you're doing it in terms of a month. In the past, when you have made these calls, it's been about inflation, hasn't it? And that's where it is again. What are you seeing in terms of components that make you confident that those were outliers that we saw a couple months ago, where it looked like it was inflation was coming back?
Yeah, the April inflation data, both CPI and PCE, kind of revealed that the two things that the Fed's been waiting to cool are starting to cool. One is shelter inflation. It's
shelter and car insurance.
It's decelerating, even though it's still,
and real estate and just a bunch of other shit, but whatever.
Higher than the Fed would like. And then I think there's some evidence that auto insurance, which has been, rising over 22%, is beginning to sort of normalize. And I think sometime before the second half, auto insurance is no longer going to be contributing to inflation. So that's the dynamic we think that's at play in this upcoming May CPI report. That comes out May 12th.
Yeah. So I think he's 100% right. May 12th. I think he meant June 12th for May. Whatever. But yeah, I think he's 100% right. The car insurance stuff is coming down hard. If you look at it, if you just look at how much Teslas have depreciated in value because of the fact that they're lowering prices aggressively to keep it to where they're pushing out as much product as possible because they want to make monthly fees from it. The prices are lower. If the prices are lower, what's going to happen with the insurance when you have repair bills? They're going to be cheaper, right? So you're going to see a massive rollover in car insurance premiums that are going to be deflationary. And again, shelter is going to start being deflationary. It might not be if we don't raise or if we don't lower rates, because when you have high rates, you actually increase the inflation in the real estate market. And hopefully fucking people start to realize that soon. But I think he's spot on. This is a really cool one I wanted to show that Vivek posted the other day, just yesterday. It says every single time with Bitcoin. And so I just elaborated on this to clarify what he's showing visually. It says 500 days before and after the Bitcoin halving, we know what comes next. So again, you can see before the Bitcoin halving, you can see after, right? You can see after, you can see after, you can see after. He's only shooting for 300K, so he's got a really low target. But I don't know. Again, this is if you're anybody that can to deal with analytics and visualize anything, this is great. This is a really great. This is what's happening. So I hope you're on board. Oh, this is another wonderful one from Willy Woo. I love that guy. He's my favorite stoner, man. I think he still lives in Hong Kong too. Anyway, he said, this is the chart of gold mining progress as technology improves. 213,000 metric tons mined so far. So here's the important thing is this is showing metric tons mined per year. So everybody thinks gold is like this great, play against money printing. But as you can see, we found ways to drastically improve. Like even just look from the 80s here, we were mining, 1,200 tons of gold in a year. Now we're doing 3,200. So we're doing like a 200% increase in the amount of gold being mined. Now that doesn't happen with Bitcoin. It's the exact fucking opposite of that. With Bitcoin, every 4 years we have a halving event that creates this kind of shit for the price action. So that there's going to be 50% less issuance every 4 years, and that's going to be going out to like 2140, longer than I'm planning on fucking being alive. So instead of seeing this, you're going to see it inverted in the opposite direction with Bitcoin. I think this is kind of a fucking no-brainer to let you know which one is better. Lark Davis posted, Bitcoin's growing faster than the internet. I mean, that's probably signal. I could be wrong, but I think that's probably important. Just in, yesterday, because I only do this every couple of days now because I've gotten lazy. Bitcoin company Lightspark CEO tells BlackRock moving money natively on the internet will unleash a pretty significant amount of GDP for everyone in the world. This is something that is really important. This guy worked for Meta for a while. I watched him on Congress or in Congress trying to basically petition for their coin. I can't even remember what Meta was trying to do. Anyway, everybody hated fucking Zuckerberg at the time. He was the robot. He wasn't the UFC fighter. And so it didn't work out. But this guy gets it, man. He's fucking brilliant. And he's right. And I want you to hear it real quick. It's 2 minutes. Oh, that's music. Fuck music. All right, here we go.
We're here at our inaugural institutional digital event, our own, thinking about payment systems and the digitization of dollars and how money moves across the internet. Talk to me about the system as it is today and what blockchains have the potential to fix.
Well, the way money moves today is still, for the most part, the same way it moved in the 70s. And when you think about the correspondent banking system and SWIFT, it's a messaging system on top of a web of bank accounts that sit in different banks around the world. Doesn't work Friday after 5 p.m., is expensive for consumers and businesses to use, is not open, so developers and other parties can't build on top of it.
Do you need blockchains to actually settle value globally? Is that an important piece of technology?
If you want it to be completely decentralized, like the internet, then you actually need blockchain technology. The world needs a form of an internet of money that enables money to travel and enable people to send money the same way that they send a text message or an email without having to think about the underlying technology.
2030, what's changed? How is money moving about the world in a fantasy scenario to you?
It's not a fantasy scenario. I think the money will move the way
I love that. I was just about to say that same fucking thing.
that it should move. And I think people don't really ask themselves why money moves the way it is, the same way that, we didn't think that email was going to be progress from fax machines. If you can move money the same way you do anything else on the internet, if you can stream money to people, to a creator in another country, or if someone in the gig economy can get paid at the end of their job, if we can actually make money flow natively on the internet, untethered by the archaic rails that it currently depends on, then we'll unleash a pretty significant amount of GDP for everyone in the world.
This is just such a huge concept that you need to understand. The banks are stealing your money. The government is stealing your money. The government does it through taxation, and if they can't get you with the taxes, they'll do it by printing it all away. And the banks love to grab those fees. They get the 2, 3, 4% fee for what? For swiping a fucking card that's got your fucking money on it, or some debt obligation, using archaic technology that's existed for 50 years. And that's just some of the newer stuff. There's no fucking point in it. There's no point in it. Again, with Solana and PayPal, PayPal was talking about how they can basically make fees non-existent. And at the same time, they're going to start charging fees for business-related activity and making some money off of that, but they'll be able to do it on payment rails that cost them nothing. And so you're going to see a massive race to the bottom with fees, just like we saw with brokers over the last decade because of companies like Robinhood, where they brought in a new dynamic, and it was, pay for order flow and like again. So there were good and bad elements to that, but it changed the game and made it to where people said, okay, wow, there's a market here where people don't want to pay $5 a trade, $15 a trade. People used to pay $15 a trade during the GFC. Did you know that? Can you imagine fucking paying that much? It's like trading at $500 or $1,000 and paying $15. That was the world that used to exist, and that stuff isn't around anymore. And you need to understand how things are going to progress in the future. And this man's got vision, and he's right. This is what's happening in the future, and it's going to make the world richer in the process of it, which is fucking great. And it's something we should be paying attention to. Novogratz talking about how governments can't stop printing money. Then you hear the state of investment board of Wisconsin is buying Bitcoin. There's just adoption happening everywhere, guys. And hey, thank you to everybody that's here. If you guys could hit the like, it's greatly appreciated. But adoption is happening everywhere. I think it's something you do not want to miss. Please pay attention to what's going on. Let me see here. I think that's it for slides. I might have. Yeah, no, I think I got it. I think we pretty well got it covered on the slide front. So I'm going to jump into here. We're going to look at some other stuff. We'll look at the S&P. We'll cover the indices real quick, and we'll look at things like gold, oil, bonds, and then some of the stocks that I hold, and then we'll go on from there. Yes, I do hold DLO. I actually think I might have bought more. I'll let you know here in a second when I look. I had some, and this is not something I'm recommending. I feel bad that I even made a video about DLO, Flux, or anything else that people have lost money on recently. I don't care if I lose it, but it's one of the reasons I haven't made a members-only video recently. I just don't. I want to focus on the big picture stuff. I've said this a bunch of times recently, but Tesla, Bitcoin, easy fucking wins. Easy fucking wins. I don't want people getting distracted by noise from something like DLO or a Flux that, I've got like 1% or 2%, not even in some cases, into these things. And them putting like 30% of their money into this shit and then finding, getting fucked because I'm wrong about a thesis that I've spent, 10 hours on. So I don't know. I'm just holding back and reevaluating a little bit. Again, I've been wrong about a lot of things. I was wrong about PayPal for a year about the timing on that. And that cost me a decent chunk of money and probably a bunch of other people that followed me. Not that it's my obligation, right? Like I'm going to be wrong. I'm a human being, and I'm not a financial advisor. So if people lose money, it's on them. But my goal is to have people make a bunch of money and to give good advice. That's why I'm sticking with the big stuff, and I'm not really pushing too much on other things that I'm looking into. I'll probably still, throw those things out in the future, but I don't know. I want to focus on the things that are, high probability bets where I've got 80% of my funds allocated, so that that's the conversation we're having, not with abstract, odd shit that is really, what it feels like to me? I felt like I had to make videos. I'm retired, I'm rich, I'm a multimillionaire, and like all of a sudden I'm like, oh, I need to do this and post about this and do this and do this. And it's like, I had to reevaluate and just go, why the fuck am I doing this? Why do I feel the need to make a member only video? And am I doing a service to you guys by doing this kind of stuff? Or am I fucking you and fucking me at the same time, trying to make myself too busy, focusing on like things that aren't the big picture, getting distracted by price movement every day. Everybody talks about price movement and what's happening. I haven't made a trade outside of maybe purchasing some DLO today if it went through in like 3 weeks, and life has been fine, and my balance hasn't changed much at all. And again, Bitcoin's going to pay, Tesla's going to pay. Some of these big ticket items are going to do really well, and maybe the small ones will too, and that's great. But I really want to focus on the big picture, and I don't want to get people caught up in, you know, fucking daily price action and little tiny things that I haven't spent enough time on. So yeah, I might own more DLO. I don't know. Let me see. My bank just took $16 as a monthly maintenance fee. Bank of America small business account. Yeah, they suck, man. Just bullshit. It's just old legacy banking. It blows. Chris Federal. Same here, Brian. My bank has been doing for 15 years plus. President of a bank can't explain to me. I use a smaller bank. Yeah, they're just inefficient, man. We don't need physical fucking banks. We need ones like SoFi. We need things like PayPal. We need things like Robinhood as a transition. And then we need to embrace crypto, of which will probably ultimately maybe even kill those through decentralized things that might happen in the future that take fractions of a penny and still allow people to be profitable but don't have any of the infrastructure. So all this stuff is going to die, in my opinion. Mark LeBlanc, that's the best lesson your viewers can learn if they haven't already. Value your time. Yes, man, time is the most important thing. Elon just posted something about time being the most important currency, and it really fucking is. MSTR or BTC long-term? Long-term BTC. Short-term, like year plus, MSTR. It's going to be a multiplier of probably 2x what Bitcoin returns. And it did good today. Let's actually look at MicroStrategy real quick. We'll start rolling through some of these things. Or you know what, before I do that, let's look at the indices. So the S&P today did stupid well, up 1.18%. Again, I said we had a pretty clear bounce off of this fib. That is holding true as we continue to climb higher. So not looking bad. NASDAQ, I think, did even better. Look at that shit. Look at this. Again, the golden retracement zone, the DOT 618. What did we do? We wicked down to it. Couldn't even stay down here. Launched up. Now we're skyrocketing. This is not a weak market, guys. These are new all-time highs in the NASDAQ. Russell's the weaker of them, but still up 1.47. Same concept, showing lots of strength here on the first fib. It looks great. We already looked at the dollar. We're going to jump to gold, my favorite thing to shit on. Oh, wow, guys. Exciting. I feel like I report the same thing about gold all the time. We're up 22% over 13 years. Yay. What a great store of value. Oil, nice bounce off of yesterday, but again, we dropped 5.5% yesterday, so a 2% pop still leaves us at a deficit. I do think oil can continue to tread lower, and again, I've called oil correctly for a very long time. I called the top way back here in 2022. That was pretty easy. And then again, I called it over here where we're trending up, over here again that we were breaking down out of a bear flag, and we're doing exactly those things. I actually think we can go down into the 60s if we don't have any major wars or expansions of wars, I should say. We got a few wars going on. But I think most of them are coming to an end. I've said that before, and I'm sticking to it. All right, let's go to the 2-year bond and just watch it melt down. Again, down 1% today. This is good. The Treasury, again, is doing buybacks, and they're helping the bond market. They're making it to where the rates are going down, and the amount of people buying them up and locking them in is going up, and they're issuing shorter dated maturities too, so that they don't really push up, rates and longer term, like 20-year, 10-year bonds. So that's why they're doing all the short-term issuance. Because if you think about it, if you're the Fed, you don't want to be paying 5% interest or 4% interest, or 4.5, whatever, 4.72 in here for a period of 20 years with people locked into that, right? Like, you don't want to be doing that. You want to have, if you're paying high interest, you want it to be for a short period of time, which is why they're doing the shorter dated treasuries. And then you want rates to start to come down so that the biggest item on the federal deficit isn't just interest. So I think that's going to continue to happen. I think it's going to ease the bond market, and I think as that happens, we're going to see stocks do well too. All right, let me just look here real quick. I don't really care about inversion or this other stuff. It's not really moving. Let's look at Tesla. We'll hop through some stocks, then we'll hop through some Bitcoin-related stuff. I said I was going to look at MSTR. I will. Promise. All right, so Tesla, at least over the short term here, you can see we're above support for, this is going, how far does this go back? September 2023. So we're going back over, almost a year, and we're peak volume here, and we're underneath of it. So that's a great sign. It shows that we're finding support at this level. Again, on the daily, we hit the 50, but we were bouncing pretty hard off of it. Here's what we need to see. We need to see that vote go well next Thursday. If the vote goes well for Tesla, I think this bitch is going to fly. Because I think Q2 is going to be all right, and I think Q3 is going to be great as people start to look at this company as something more than just an auto company, like they should be. PayPal CEO Alex Chriss will be presenting at a conference at 4:20 Eastern time today. Isn't that funny? So that is probably like now, right? It's already happening. We'll have to look that up. PayPal up a bit. Let's look at PayPal. Let's go to PayPal. Actually, that's next to my little clicker. That's perfect. PayPal. PayPal is down 79% from its high 3 years ago. And it is up 1.26. So Alex must be saying some good stuff. We'll have to see what all comes from that. Let me actually check real quickly and just see if there's any good PayPal news we should be paying attention to. See if people like Amit are dropping the PayPal bombs. Well, I don't know if that'll be Amit. He's pretty focused on other stuff right now, but maybe somebody, maybe a Crossroads or somebody's got some cool data points for us. PayPal CEO on second quarter. Q2 is off to a strong start per Chris. It's trending ahead of the guide. Oh, yeah, I told you they were lowballing it at the beginning of the year, and now they're going to be going higher. So that looks good. This makes me happy. I love seeing PayPal not go down. That's great. And then we have a bull flag. This is a very clear bull flag. The measured move for this bull flag, if we just do one of these jobs, and then, I don't know, maybe turn it green because red's depressing, and then just redraw it up here. So look at that. This bull flag right here that wants to break out literally is trying to push us up to that peak volume range in the 72, 73 range. And that would be the fourth higher high. Well, I shouldn't say that. Third higher high over here. And that's what we want to see. Higher lows, higher highs. It's a great break in a trend of something that is the perfect definition of a market cycle. This is like the perfect definition of a market cycle. If you go back here, look at this. We even tested down almost towards this previous, trading range. Bounced up though, and been grinding above all this peak volume, trying to get our way back up to 73. I'll probably sell maybe 20% or more, maybe 25% or more of my 2025 calls when we hit the 72, 73 range, when we get around there, just to get rid of the old shit and keep it on the sidelines for something else. But I'm very excited about the 2026s that I have, the $95 strike. I think they're going to pay out well. And who knows, by some fucking miracle, if the economy isn't falling apart, maybe these 2025s even turn green. They have time. I'm not betting on it, but it'd be nice to see. And if Alex Chriss keeps outperforming, it's going to be really hard to have a negative narrative on PayPal. All right, let's look at Hood. Hood was up 3.8%. I said yesterday we're continuing to just scream higher towards the $30 range. That seems to be true. And again, this is kind of where my targets are, previous trading volume. So anywhere from 30 up to the 34 range, I think is very possible. And Hood is a strong company. I'm still waiting on my gold card. I don't know if you can do anything about that, Vlad. Or Amit. Amit's buddies with Vlad now, so maybe he can do something about it. But I would like my gold card soon. Please. SoFi. Let's look at SoFi. All right. Let's just, this is a really small chart right now. Really small. All right. So we're above, again, this trading zone. This is the monthly chart. So let me just go back to the weekly. You can see where, again, technicals do work, guys. You can see where previous support, turned resistance, turned back into support, broke underneath of it, able to get back up, support. We are grinding on support right now. This bitch wants to fly. We need to get above 730. Ideally, we really need to get above the .618 at $8. If that happens, I still think there's a very strong chance that we can get back up to the $12 range right around there, where we saw, roughly a year ago for price action. And if that happens, I can actually turn around my 2025s on these. It would be really awesome if I could be like, yeah, see, I told you guys I made a little bit of money off of PayPal 2025s and SoFi 2025s and ARKG 2025s. Considering these have been my worst fucking trades. So I will rub that in some motherfuckers' faces. Everybody that was talking shit, I got your name. I got you on a sheet. I will bring that shit up over and over again if it happens, but I won't talk too much shit right now. All right. Square's been getting kicked in the nuts. How did it do today? 0.86. I'm actually getting interested in this trade, potentially for an options trade. I have not looked into it though, but I'm interested in it because, again, we're back towards peak volumes for the entire history of the company. That's this deep red line. And the fib. We're sitting right at the fib level, the first fib. And so this thing, we're just right underneath of it. This thing wants to go higher. And again, I love the initiatives that are being taken from Jack Dorsey right now with Square in regard to the Bitcoin mining, in regard to making it easy to purchase with your money. Jesse is scary sometimes. Yeah, just sometimes. Not all the time. I've got a bigger bark than my bite, trust me. But thanks, Kelly. Thanks for distracting me, man. All right. But yeah, Square. I still think Square could do really well. I would not touch anything 2025, and I wouldn't do anything too drastic and out there. But I might actually look to open up something for 2026 on Square. Maybe over the short term here, just based upon what they're doing and the fact that I greatly support it. Again, I love this mode of Jesse. Yeah, I do too, man. I think this is the fun version right here. This is the good stuff. All right, let's go to Palantir. Let's make a mid happy. Now, this is done really well. Let me just go to the daily. I want to go to the weekly here too, maybe. Yeah, the weekly's probably better. We're just climbing. So this is great. We did turn the fib, the .768. Again, previous resistance, heavy amounts of volume in here. I don't know why my BRPR, why isn't my visible range volume profile showing? What the fuck? Oh, because I hit it. Weird. All right. Anyway, so you can see here where we had previous volume from back in the day when these guys originally went out and kind of came into the markets. You can see a lot of that, it turned into previous resistance here. We shot up. We had this horrible like bearish divergence on the RSI, bearish divergence on the MACD, and yet we were trending up. But so much good news has come out with Palantir and their contracts. Thank you, Andrew, for joining. All you people, I really appreciate you, man. But all this good news has happened, and we actually turned the .786. I was talking about this for a while. We turned it into support, and now we're seeing a trend, a bullish divergence forming here, even on the weekly time frame on the RSI. And we're going to hit very peak resistance at, the 2460 range, right around there with volume. But honestly, if Palantir does have S&P inclusion in front of it, I think 30 could come in short order. This is going to be a highly valued company. If we look, let me go back over here and just pull up Palantir and see what they're at. Let's look at some stuff like their PE ratio and all these other things and how they're doing. I haven't checked them out in so long. So again, 64 for a forward PE is high, and it could be like 90 plus by the time we get to 30. So again, it's hot. It's a great company. It's probably going to be a great hedge against war. There's so many good things about what's going on. Just their bonds alone, 3.4 billion in bonds collected, 4+% interest is not a bad deal. And expenses aren't really going anywhere. Revenue's going up. Stock-based comp is kind of trending down. Everything is pointed in the right direction, but the company is still rich, and I don't think it's an asymmetric bet right now. But I do plan on holding more than one share by the end of this year. I'd like to get these guys up to several 100,000. In next year, I would like to get up to 500,000 in Palantir, I think, at some point. And who knows, maybe that'll turn into 1 million as well. It's just, I need to see how the stars align, but I do like Palantir right now. I think it's a great bet. And just a really great company. And you just gotta love, like, there's a certain number of like great CEOs that come around that represent truth and a better tomorrow. And you gotta latch on to companies like that. ARCG Genomics, I love what's forming here. These green candles, we're back above this, horrible downward trend line that's been going on for 1,246 days. That's probably old, probably needs to be updated. But we were up almost 5% today. So we're seeing a bit on risk that we're seeing in meme stocks and everything else. And I like that. And so I don't think it's a crazy bet to believe that ARCG could double from where it is right now. And I could make a shit ton of money off the options contracts that I hold, even the 2025s. So I think that's still in play. I wouldn't buy 2025s. Don't buy the shit that I've loaded up on. If I did anything here, it'd be 2026, or just hold the stock. If it doubles in price, I mean, that's still 100% gain. You can't hate that. All right, let me see what else we got here. Flux. What the flux is going on today? Still trash, kind of hovering around the fib level. This is a small cap, so it's suffering from small cap syndrome, which is it's not Nvidia. So it's down 87%. The company is not a bad company, though. If we go up, in DLO especially, if you look at DLO's numbers, if they're remotely right about what they're guiding towards, I think it's still a great opportunity. Now, Flux admittedly had a shitty quarter, right? They were starting to trend towards being net income positive, and they just took that away in Q1 of 2024. So when they got smacked, there was a reason for it. And revenues, again, starting to flatten out. So I don't know if this is the best play. I've not added to this. And again, they're trying to trend positive. I'm going to let this one play out. The one that I like probably more is, again, DLO. And I don't know if I actually closed anything. I'll probably post about that later. If I did end up closing anything, I'll let you guys know. But DLO, look at this massive gap right here in price. And it's just down so fucking far. I think it's down 89% from its high over here. In 2021. So many years ago, right? And if we look at the fundamentals for this company, they're not bad. And I would argue that it's cheap. And again, this is very focused on Latin America, Africa, other parts. The one bad thing that happened with them is the last couple of quarters, I was hoping that their net income would break higher. It did not. And they actually had their revenue kind of peaking a little bit here. But you got to realize these guys have 44 or 34% revenue growth year over year. Profits are down, but forward PE is still sitting at like 16.48. It's not bad. And if this company does turn around, they have no debt. I would like to see their operating expenses flatten out, but they're across a multitude of sectors. If we go into the charts here, you can see where they're in Egypt, Africa, Asia, Chile, Nigeria, Mexico, Argentina, Latin America, Brazil, like all these different categories where they're playing in. And I think some of them are going to be very powerful ones. Now, their margins are dropping. The markets are competitive. There's other companies out there that are competing against them. And so maybe this won't turn out to be a good play, and I've dedicated a couple percent and it'll just go up in smoke. It's possible. But their guide, if they're right about the guide, and I still have to do deeper dives into this, and I don't recommend this to anybody, but the revenue continues, their guide is higher, and their EPS looks like it's supposed to recover. Will it recover? I don't know. They were guiding towards higher levels this last time, and they went lower. So it's really something where they need to start doing what they're talking about. But if this turns out, if their guide ends up being true, this is going to be interesting. It smokes the old cheese pole, Mark. You guys are great. All right. So anyway, so let's jump. I'm going to jump real quickly to Bitcoin, and then we'll I'll start pulling up charts for you guys. We'll do some of that today. All right. So Bitcoin, it's no small matter that Bitcoin has found support on the previous highs going back into March of 2021 and November of 2021. I remember these years. And we found support off of it. We're easily back above the fib here on the .5, trending towards the .618. I think we make a 30% launch here in the corresponding months. tends to happen around after Bitcoin halvings. Again, I showed you the chart a little bit ago showing what happens the 500 days after the Bitcoin halving. The amount of pressure building right now in Bitcoin is a powder keg. And we're just waiting to liquidate a shit ton of shorts in the 72,000 range. And there is some huge liquidation levels in there, $1 billion plus just right in this range that is waiting to get chopped up. So that could send us, decently higher. And as we get up into here, just look at the volume, guys. This is one thing I want to make sure I'm pointing out to you is look at the volume of trade history for Bitcoin going back many, many moons. Look at this range, how predictable this trade range has been on the weekly time frame for Bitcoin. Look at this. It's just always above this line right here. And then over here, we've got pretty much, a consistent channel of an upper end bound too. And if I'm right about projections still here, going out over the next year and a half, where I believe we'll peak, and we'll probably peak early in my mind, because I think we'll just have such a crazy fucking risk on environment, then we're looking at an increase of 236% to 285% in Bitcoin's price and a top in the 270 range. And I'm trying to be conservative here. So, but look at this. All of this volume is underneath of us. It's nothing but net above us. This is something you have to understand. And the FOMO hasn't even kicked in. If we look at Bitcoin and we're focused on what people are saying about Bitcoin right now, I want to zoom out here. I'm going to go back 5 years. Nobody gives a fuck about Bitcoin right now. Nobody fucking cares. Let's go back even further. So here is some peak Bitcoin stuff in 2013, 14, right? This is where people got interested in this. You can see the cycle in here. Here's the 2017 cycle. Here's where we got neutered in the last cycle because of the Fed raising rates at the most aggressive rate in history. I think this time we'll see rates that dwarf what happened in 2017. And here's where we are right now. So we're not in the FOMO stage yet, guys. The crazy shit hasn't even fucking started, but it's getting ready to. I would highly encourage all of you to be on board. MicroStrategy, up 3.41% on the day. I think we're getting ready to wreck some shorts on this. I wonder what we're sitting at. Let me see what some of the latest numbers were on the amount of short interest. Short interest, almost 20%. These people are so fucked. The miners look like this too. They're just so incredibly fucked because MicroStrategy is a meme stock now, guys. It's a Bitcoin meme stock. And this thing dropped almost 50% from where it was in March of 2024 to where it ended in May of 2024. And in that amount of time, it has already climbed 70 fucking percent. And it's just getting started. This is a 2x multiplier to Bitcoin. Historically, that's probably being conservative. So if you want a multiplier to Bitcoin's returns of a 230 to 280% return that turns into 460 to 560, 80% roughly in returns, then MSTR is your play. If you want something more, then you start looking at other miners. Mara would probably be the least returning because of the size of its market cap. Its market cap is $5.75 billion. It's above its 200 moving average, where it appears to be finding support, if Bitcoin's finding support, just to get back to its recent high over the last, not even 52 weeks. I mean, just really the last, couple of quarters. We're looking at a 62, 63% increase in the price. And then to get what I believe will be a target here before the fall, we're looking at 126% increase in the price. And so, again, the miners, I think, can do 3 to 4x Bitcoin returns, or at least a 2.5 to 4x. MicroStrategy would probably be Mara would probably be the 2.5 to 3x range. And then smaller miners would do better. And I know there's a lot of other popular ones like Iron and Wolf. What people don't realize is 80% of these miners will probably do okay. right? They're going to have, if we don't go anywhere in price, they could get rough, and some of them will fail, and we'll see some consolidation. And I do think we'll see consolidation. I still wouldn't be invested in a company like Hut. And I know everybody's in the big AI narrative on miners. I don't think that's going to play out well. I'm with Rex Finance on that one. I still don't think that's going to play out well. It's a picks and shovels game. NVIDIA is going to do really great. And then the companies that have real AI like Palantir and Tesla will do really great along with some others. But the people that are going to sell the service, I was a Bitcoin miner. I know what it's like to have a shit ton of graphics cards and ASIC miners. You pay a lot. You get excited about the fact that you're going to ramp and make all this fucking money. And then you realize everybody thought that same thing. And they all invested into it. And then their expected returns as everybody ramps for that get worse. Now, if you have a Bitcoin halving event, and you've got this massive economy of scale, then the pain isn't that bad, as the price well outpaces the difficulty level, and so you end up doing all right, and the halving event. So you end up doing all right with Bitcoin, but with AI, I don't think you're going to get that kind of return, and I think that people are getting very excited about that. I could be proven wrong. I'd love to be proven wrong. I don't mind people making money off of a different play in Bitcoin. All of these will rise. All of them will. And so if you can get a 2.5 to 4x multiple, I do want to say this, though. They will lag. They'll lag until Bitcoin really starts fucking taking off. And then when people have made too much money off of Bitcoin, they're going to say, oh, I need a multiplier, man. I could make way more in the future if I invested in like this mining one, because my friend did the mining thing and he's up like 300%. I made less than 100. So like I made like 80 or 70 or something. So I want that 300. And then people start to dial into multipliers. So, and again, MicroStrategy probably first. As you see with Mara, it was only up 2.68, and yet MicroStrategy was up 3.5 or something like that. So you'll see more. Yeah, 3.41. So you'll see stuff like that. Now, CleanSpark, again, I love what these guys, their mining report was great. I'll probably try and do another market recap here soon that focuses a little bit more on miners, my thoughts on it. I think I owe that to you guys. But hey, Jesse, current read on CLSK, beautiful timing, Maytag. Love your content. I love you, man. And if you guys could hit the like, it's greatly appreciated. It helps me out. So, and thank you to Andrew for joining as well. Now, I do want to say, if you look here, peak volumes were just a little bit under it on CleanSpark, up 1.68% on the day. I think they had really great numbers for May, for their May production. They only had like 400 and something. But when you look at the halving event, you look at their expansion. And again, when I compare some miners to CleanSpark on here, it's just not comparable. Like look at the revenue growth in CleanSpark. Look at that net income growth on CleanSpark. Cash positioning. Again, they did a bunch of dilution, but I think they've been smart about it. Look at the consistency in their mining hash rate growth. So even though you have what's happened here with Bitcoin halving, these guys are making up for it in a ton of different metrics. And again, look at their Bitcoin holdings. This is what happens when you have when you have a lot of Bitcoin holdings. And Mara looks a lot like this too, where you see an exponential growth in the dollar value of this. In Bitcoin holdings, it doesn't look like an exponential growth, even though they've worked really hard on hodling. But in the dollar value, it's stupid. This is a stupid increase. And it's only going to get more stupid. And look at operating leverage here too. Look at the expenses of these companies as they depreciate and write things down while the revenue growth expands. And that's only going to get crazier. So again, I expect to see a lot more of this with companies like CleanSpark, and this will be a greater multiplier than what Mara will be because the market cap is smaller. Okay, the market cap for this one is 3.73 billion versus 5.75. That makes a difference. To chat, I wouldn't be purchasing 2025 calls at this point unless it's a short-term swing. I wouldn't do that for anything. I wouldn't purchase calls on any miners personally either. I don't know if that's what we're talking about, but I would not be doing that. The time for purchasing options on miners has long passed. And if you were going to do it, you should have done it like for CleanSpark when it was April of 2024 and it was way down here in the $13 range. Now when it's in the 16s. And honestly, like if you just look at the options, they all fucking suck on these miners, man. Don't buy options for miners right now. At least a PayPal at 2026 can give you a good return. I wouldn't touch shit on this. BITF, yeah, I could do that one too. Let me do Cypher real quick too, since I don't hold BITF. I don't like the Canadian miners really a lot right now, especially ones that replace their CEOs. All right, so this is beautiful. Again, we're above the first fib line, and we're above peak volumes. And so Cypher wants to scream higher. And it wouldn't surprise me at all if we got to like a 575 or something, which is a pretty big increase over a short period of time on this miner. And let me see, like, again, just hitting that previous level is a 43% increase, but I think we could do 49 really quick. I think we can get to the .5 in short order on this one. This is only a $1.25 billion market cap. So the ability for this thing to double over a short period of time is much higher. Because again, this thing is like a 20% or less of what Mara's market cap is, for a decent reason, though. They don't have near the Bitcoin. All right, let's see what else we got here. What do you guys got? So I'm going to start looking at charts based upon your guys' requests. I'll make it as far as I can. Justin Robinson. Hey, Jesse, mind taking a look at SHOP? Looks appealing to me, below the 200-day moving average. Wanted your thoughts. Thanks, brother. Yeah, let me take a look. Let me take a look at SHOP. I think I looked at that the other day, too. And let me actually, before I go into there, I'm going to go over here. I want to look at SHOP. I love looking at the fundamentals of the companies that we're talking about, because if you just look at the technicals, they can be deceiving. Now, SHOP still looks good. It's seeing expansion. It's got 22% revenue growth, but profit growth has not really been happening. The PE ratio, though, is high at 57.72 on the forward PE. So it's a really highly valued stock. I kind of love them, though, because they're kind of democratizing shopping to where people don't just have to go through Amazon. So I love that. But look at the short interest increases here recently. And let's see, are they buying or selling? So they were selling more in Q3 of 2023. Haven't really been a buyer of their own stock in a while. How much did they hold? How much of this is insider? Not a lot. Very little insider. A lot of institutional and a little bit of retail. Not a lot of short interest, though. Still at 1.55%. And revenue growth, again, is good. And they were pulling in some positive quarters, 700 million. 656. I don't know. This is probably going to be a decent, like, steady Eddie stock where things continue to increase over time. But I don't know. There's just so many other asymmetric bets right now. So I'm not interested really in Shopify, just because, again, the valuation is still high. Even though, let's look at the technicals, though. Let's look at the actual chart to see if that looks interesting from a technical play, even though I don't believe the valuation is great as far as opportunity right now. My Jack Russell Terrier is walking over here and looking at me. Hi, dog. How are you? Need to get her nails clipped. They're not good. She's a geriatric dog, so she's a fucking mess and very high maintenance, and I forgot to put up my gate. Yeah, so we did get a bounce. We could actually get back up to the 200. So as far as a trade goes, maybe it gets up to 68 pretty quick to close this gap over here. But I don't love the valuation. So that's my thought. Dennis Newber, with conflict rising, what do you think the chances of the U.S. sending troops over would be to the benefit of the stock of Palantir? I think Palantir is going to benefit really good. I think Anduril is. I actually want to get. I'm going to try before the end of the year to get Anduril stock. I need to get Anduril stock, even though it's not public, and it probably will be in the future. I need to get Anduril stock before it goes public, and then also, again, I want to buy more Palantir too. I don't know how much you guys can hear the clicking of her nails on the ground, but it drives me fucking nuts. But I love this old dog. Anyway, but yeah, so I actually think, I don't think we're, so Dennis, I don't think we're going to be having a major threat of war soon. Could be wrong. I actually think that Xi could lose his head sooner than that. And maybe, I don't know. There's so many variables. It's so easy to predict the doom and the gloom, right? But if you were to look back and said that, 2 years ago when Russia invaded Ukraine, that Russia would be failing miserably and not complete their invasion in 3 days, and that their economy would be at a state that is just horrific. They're in a wartime economy, but they're not getting any benefits. And without China, they wouldn't even be functioning right now. And so I don't know. I don't even know myself, Chris, how to access Anduril. I did see your message the other day. I want to make sure that I'm giving guidance at the right place to be able to to purchase the stock since it is in private markets. So as soon as I find a good way of doing that and have done it, I will pass it on to you guys. I just don't want to point people down the wrong direction and have them lose money because I'm getting fucking scammed and they're getting scammed too. So as soon as I'm sure on a good way of doing that, I'll let you know. I do want to get into that one though. But yeah, so I think if you would have said though, going back to Russia-Ukraine war, and then also what happened with Israel and Palestinians and like all this shit, look at all the scary stuff that was supposed to happen. We've got wars on multiple fronts all around the world, and yet I don't want to say it's going good. I don't want to say it's going good because that's disparaging to all the people that are losing their lives on all sides. But it's not bad. Russia can't really make progress. They need the war to end. I think Trump wins a re-election, even though I don't know if I like Trump. I do like his Bitcoin stance. But I think he wins a re-election, and I think he's buddies with Putin, and I think that war kind of goes away. And if that happens, that would shift the dynamics dramatically away from China. And Russia Putin needs a win. He needs a win. He almost got overthrown. His private army was going to fucking kill him. So Prigozhin was going to kill him. And they did some kind of maneuvering and convinced Prigozhin that he was going to die if he tried to do what he was going to do and that he should quit. And he did die anyways. They fucking murdered him. They shot him out of the sky. So so that probably wasn't a good bet on his part. He should have just went through with it. But Putin needs a win so that he doesn't get overthrown in his own government. And because he's got oligarchs that have lost fortunes and they can't travel to Europe anymore, and they've had their massive mega yachts taken away, and that can't make them very happy. So I think that if anything, we might be seeing a calmer time ahead. Not that war can't happen, but I gotta say, Anduril, Palantir, maybe some others here are good bets if war does happen. So I strongly believe that. And what did you say, Jesse? Hope the Cybertruck is still as badass as the day you got it. I fucking love it so much. Outside of people trying to fight me or coal roll me or whatever stupid shit because I live in the Midwest, there are a surprising number of people that love Elon Musk, even ones that are like riding Harleys or that are in coal rolling pickups that think he's fucking great and think the Cybertruck's badass. So I focus on the positive. And the best part is whenever I drive by a school with like elementary or junior high kids or whatever, they flip the fuck out and they're the future. And so when knowing that they're losing their shit over this thing lets me know that we're going to have a good future or have a probability of a better one. Jason, quick, please. I don't know what quick is, but I'll look at it. Let me see if I can pull it up over here. Oh, dog, please leave me alone. Leave me alone. Quick Logic Corp. Let me see if there's anything else here. Net income starting to turn positive. Got a little bit of a hiccup. Revenues have been going up 45% year over year. Gross profit slowed. Predictions look good. Institutional ownership's increasing dramatically. These guys really started to buy back stock in the 20. Yeah, they've been consistently buying more than selling. I like that. Short interest increased a lot. Let's go back here. What's the valuation? Forward PE is 23. PE is 182. There's a big dispersion there. Operating expenses are flat. So this company's doing all right. What do they do? Semiconductors. They're riding the semiconductor train. Massive retail. I wonder how much that's changed over time. 1 sec. I need to slam this door real quick. Charlie, get the fuck out of here. Go. All right. There we go. She's out. I don't have to hear that shit anymore. Losing my mind. Trying to listen to like the pitter patter of a dog. She probably needs to go out, but I've got diapers in the laundry room in case things get bad. Not that you care. All right. So yeah, I don't know. This looks interesting, man. Let's look at the actual stock here because this is interesting. The growth is good. They are actually seeing growth in the semiconductor space, and their estimates look good too. But again, this whole sector. I mean, if they're really pulling off this kind of revenue growth in the end of this year, that's going to be nice. But they better. Let me go back here. They better make that happen though, because again, their current PE ratio versus their forward, it's still kind of a rich valuation. So let's look up quick. I'll just probably pull it up over here real quick without real quick. Let me just look at it over here without saving the chart this time. I just want to get a glance at it. So, wow, this is a company that's been around for a while, huh? Wow. So, who are these guys? So, in the dot-com bubble, they launched near the beginning of the dot-com bubble. Fascinating. So, an old company, January of 2020. Boy, horrible timing. So, $152 went up to 600 and something. Then people melted, going all the way to what? 2002, and it went down to $11 from 600. Boy, that would have been painful. Shot up a bunch. This thing's got a slingshot effect, doesn't it? So it went 10x into 2003, then fucking melted down into 2000, the great financial crisis, down to $7 again, then shot up again. Fascinating. So it does have some bounceability, and we are seeing some actual fundamentals here. Would have been better to buy this thing in the $2 range before it shot up to 20. It did have another one of those 10x moves, but maybe there's some play still here. Let me see. I'm going to do a trend-based fib extension. This is a toughie. Where do I draw this one? I'm probably going to draw it from the GFC. Charts like this are harder. They've kind of got their own unique timelines. Need to draw this one a little better. So it is bouncing off the .618. That's interesting. If it can stay above that, but there's a little bit of gap underneath it here, right? So we're above it right now, though. If we can continue to stay above this, then maybe we run to like the $17, $18 range again. But it looks like it had a really good peak in March at $20 and then went all the way back down. It had like a 50% haircut. This is such a volatile sector right now, and I feel like NVIDIA is going to take most of it. I don't know the fundamentals about this company. Maybe it can go up and you can get a good bounce here. I don't know. I hesitate to say much more than that, though, because these things are so obscure, and this thing has had a history going back since the dot-com bubble of stealing your money. These are lower highs, right? So I would keep that in mind, Jason. I would keep the fact that lower highs appear to be the norm. So if this thing got to like 30, I don't know if I'd be really bullish about it going higher. On macro, where do? Oh, you deleted it. All right, MB, let me know when you get that back here. Oh, BITF, I didn't do that. I should do that real quick too. Let me look at Bitfarms. All right, so Bitfarms has had a pretty good bounce. It's up 4% today, down 2.4 in after hours. So we got down to the 150s, and then we got back up above the 200 moving average. We're below it in after hours. NFP on Friday. What's the acronym for NFP? Is that an economic thing, or what are you talking? Can you clarify, MB? While I look at this. So it's good that we're above the 200 moving average. I think Bitcoin's going to continue to show strength, and 386 is something we could definitely run to. This market cap is tiny. It's a $757 million market cap. Through Disruptor as an accredited investor, not 100. Yeah, I think that's the only way to get in right now. Hey, is this Jeff Lutz? Is that who I'm talking to? Yeah, you're probably right. It's probably the only real way to get in is being accredited. So you got to have some money. You got to either have a big income, or you got to prove like you're a multimillionaire, and then you can get into it with something like that. And that's probably the way to do it. I just don't have any experience in doing it. I wasn't an accredited investor until the last several years, and I've just been in the public markets. So this is still kind of a learning curve for me. So if anybody has more, definitely throw it out. No, different Jeff. Okay. I know he follows me too, so I can't quite know. Anyway, but yeah, so I could see the market cap going up for Bitfarms. All tides will rise. It's a small cap. It can outperform. Gorgo, anyone had good experience with Disruptor? I tried Anthropic, SpaceX with them, and both failed. Good to know. All right, if anybody has any input, throw it out there. All right, Mikkel, getting much more bullish on Cypher after today and yesterday's updates. Seems the only upgrade projections, when they're absolutely sure they'll get in there in time. Others might fall short. They could. Again, I think all boats float, and I think as Maytag says here, BTC is going to the moon. Ryan Ripkowski, HSY, please. Not sure what that is. Let me take a look. Hershey's, the Hershey's company, chocolates. Wow, I don't love this chart. Let me look at their actual financials, and then I'll tell you why I hate the fucking chart. DJ White Gold. Hey man, I think I follow you on X maybe. Anyway, I'm not sure if you're doing the cheaper package, you're coming back, you were here, whatever. Either way, I appreciate you. Thanks for coming in. All right, HSY. Let me look at the fundamentals on the Hershey company. I do love me some dark chocolate, but not bad actually. Kind of impressive revenue growth. Well, 9%, but profit growth year over year, 36%. Forward PE is worse than the PE at 21. So, not a crazy valuation. They still have a lot of debt. It's probably long duration, but like when you got 3.7 billion in debt and 520 million in cash, it's not a great number. Short interest, 2%. Not a lot to speak to there. So here's what I don't like. I don't like the guidance is flat going out through the rest of this year. I don't like the fact that we aren't seeing this company buying back their shares because they have no real incentive to. What is stock-based comp on this one? Let me go back. It's a small number for last quarter, 0.18%, 0.93%. Yeah, this is pretty much like it's an old corp, so you don't really see a lot in dilution with stock-based comp when your valuation is what, $40 billion? But I don't like the debt. I like the increase in net income. 800 million is all right, but the PE isn't like, this isn't a tech company. Please hit the like. I agree with Needs 55. Hit the like. If you can comment too afterwards, that's always appreciated. But I don't like the setup from a technical level either. This is barely hanging on to the 200 weekly moving average, and it looks like a fucking bear flag. So I personally would not own this. Even though I like chocolate, you don't always buy the things that you like just because you like the product. I think Rivian makes a great pickup truck, but they do it for $150,000 a truck, and that's not fucking great, is it? I think Lucid with their Sapphire Edition car, I think it's the best electric car on the planet right now. But it cost them $500,000 to make a car that they're selling for like a little less than $250,000, and I think that sucks. So again, like just because you like a product, it doesn't make it a good one. And this is a bear flag. So I would stay the fuck away, personally. Justin, hey Jesse, LAC, financials and chart please. Could be a lithium mining play. Thank you. I don't really love lithium right now, man. I think that's such a shit sector, if I'm being honest. But I will pull it up. So Lithium American Corp, woof, been kicked in the nuts, right? So lithium, $25 for this company. Now it's $3. That hurts. I don't see this getting better. I don't see this is a heavily saturated market where you have every fucking legacy auto company telling you they don't give a shit about EVs or that they're focusing on it, but they're not really fucking doing that. And then you have over 500 EV manufacturers in China, of which 99% of those will probably disintegrate in the next couple of years. So these guys have contracts with all these lithium companies, and yet they're backing away from them. I think that's great for Tesla, but I don't think that's great for these lithium companies that have been ramping up, thinking that they're going to make a bunch of money off of this gold, this lithium white, whatever the fuck color lithium is, gold. And they're not. They're going to lose all of it. And let's just look at the financials on all these. So I was in lithium like a couple of years ago, and then I realized that it was going to be a shit play because you got this thing, right, where everybody's jumping into it. Everybody's jumping into it. Look at this company. They don't even have earnings. Really? Is this broken? Let me go back over here. I just need to double check. It's probably not broken. Yeah, they don't even have revenue. So this is about as fucking speculative as you can get. And I'm not saying this to be a dick. Who is this? Justin. I'm not saying this to be a dick. I'm just saying it to be super fucking honest with you, bro. Like, this company sucks right now because it just doesn't have revenue. Again, their cash position's kind of been burning away. Massive share dilution. Look at this jump in share dilution, but it's not a Bitcoin miner. And their estimates are non-existent. So I just don't touch shit like this. You're going to lose a fucking bunch of money. That would be my take. There's a reason this is bled out from April 2024 from a $7.72 all the way down to $3. So don't invest in this shit. You're going to get fucked. If you like getting fucked, then do it. I'm just kidding. Don't fucking do it. Michael Myers. I love that name, first off. Hey, Jesse. Excited to catch you live today. I'm happy to have you here, man. I love the movies. Again, Thinlay. Hey, Jesse. Looking forward to the show. Me too. Needs. All right, let me see. Do we have anything really? Canada lowered. Okay, we talked about that. ETH trying for 4K. I do agree. I think it is. Actually, how's ETH doing? Let's look up some Ethereum here, guys. Actually, you know what? Let me do it over here because I actually have this one. I haven't really. We talked about Ethereum. We talked about the fact that it's becoming inflationary again, but I don't think we actually looked at Ethereum. And let's see what the ETH BTC trading is doing here. What are we doing? Ooh, that's interesting. So potentially the Ethereum BTC trade might have found a base off of previous trading ranges, and it does look like it's getting ready to do a breakout. So I don't hate ETH right now in that regard. And then, oh yeah, let me go back over here and I'll look at the actual Ethereum. And I think maybe Ethereum steals a little bit from Solana, but the market cap is so huge. It's looking good though. It's looking good. Chart looks good. Again, we're not far away from a breakout zone on Ethereum towards new highs. I mean, it wasn't even 5,000. So Lululemon is up. Yeah, they were down like 40% or something. That's cool though. I'm glad to see that they're doing better. Let's see. Do you think ARM will follow NVIDIA or go down because its PE is way too high? I'll look at that. Give me a second. I'm just jumping all over the fucking place here. Let me see real quick. Let's look at NVIDIA. I keep desaying as DLO keeps getting lower. Yeah, DLO. Did I look at DLO? I feel like I started to. Maybe I didn't. Let me look at that one real quick, and then we'll jump around here and look at some of the chips. All right, so DLO, again, getting its ass handed to it. Oh, yeah, I did look at it. Big gap, dropping low, down like 89%, probably trying to establish a bottom. And I'll let you know if I ended up closing that position. Now, let's look back over. I want to pull up NVIDIA. So Ethereum looks good. It looks like it looks poppy. It might even take the lead from Bitcoin for a little bit because that pairing is looking good. Let's look at NVIDIA, though. NVIDIA just had a fucking great day. And could ARM do all right? I don't know. I think ARM is incredibly overvalued. I'll double check my findings, though, and see how fucking wrong I am. Now, there's so many gaps in NVIDIA. When it does melt down, this will melt down. I just don't know if that could be years from now, guys. And people could just be trying to short this bitch as it continues to go higher. It's a $3 trillion market cap, and I think Amit posted earlier that it surpassed Apple. I think that's justified. I do think that someday, though, Tesla will pass these guys, maybe within the next 3 years, and that will be a painful day. Let's look real quickly at ARM Holdings. So what's the PE on this one right now? 81. For the forward is 81. The PE ratio is 362. Little rich. What is NVIDIA right now? NVIDIA is probably like cheap in comparison. Let's see. 40. It's like half the forward PE. So NVIDIA looks cheap right now compared to ARM. I don't know, man. There's this rule, and maybe this is what's fucking me on DLO. So because Mercado Libre competes in that same sector, right? There's this rule where winner takes most. James from Invest Answers loves to talk about it all the time. I personally would rather be an NVIDIA that's got a better forward PE, a better PE ratio, 262% revenue growth year over year, profit growth of 629%, and just like a parabolic net income statement that has them at $15 billion in net income over a short period of time. You got to remember, these guys, they did almost 25 billion. Tesla's talking about doing like 4 billion just in revenue. So 25 billion And Tesla's going to do like 4, and they're plotting for, I don't know. I would rather be in Nvidia. I just think it's a safer play, personally. I mean, look at this growth. It's still so great. What do you think will outperform? PayPal calls at 95 for 2026 or Tesla at 3? I think Tesla is the safer bet, but I think either one of them could outperform each other. But I would lean towards Tesla doing better on the June 2026 calls that I hold, with a 330 strike that I've got. Mine isn't 300, but it's 330. I think that's very doable in the next 2+ years. But I don't know. PayPal could do really good, though. I mean, again, either one of them. I don't know which one's going to do better over that time frame, because really, I got to say, 2 years is a shorter time frame. Again, it's one of the longest that you can get on an options play, but 2 years is like a lot of things can happen over 2 years. Let me squash my wife real quick here. I probably need to bail in a second and talk to her and see what that's about. But yeah, so I would rather be in Nvidia, and I don't know which one of those do better over that time frame. I like both of those plays. I've got more dedicated toward Tesla because there's so many asymmetric opportunities with Tesla. But you have to realize that PayPal will outperform. Alex Chriss does that for a fucking living. What are they even sitting at right now? Let's look at that one more time real quick since that meeting was happening. Let's see if they're doing any better in after hours. So still up about 1.37%, but he said that they're doing better than their guide, and so that's what we want to see. And then they're breaking into the advertising game. I've been preaching that for a while, that these guys will be able to make tons of money off of advertising because they've got a wealth of data and make up such a huge amount of the e-commerce market. So I stick to that. Can you set aside 1 second the hate for China? I don't hate China. I actually love China. I love Chinese people. I hate the CCP. I hate communism. I would love for Alibaba to do great, but the country is fucked. Forward estimates look extremely good. I don't believe any of that. I actually think that China is on the precipice of a depression. There are so many things. I need to do a China video. That's probably the thing I need to do this weekend. I need to show you guys just how shit China is, because I haven't been doing a good job talking about China, and I'm letting, there's too many people that are obviously getting excited again. I know there's people like Jake, W, and just a bunch of people that kind of, I don't know, he's really great at technicals. I fucking love his work, actually, but he doesn't differentiate with what's going on in China, and China is a fucking mess. We are literally taking almost all their shipments from companies like Temu, which we're going to be cracking down on hard, and we're inspecting all of them, and we're finding fentanyl, and we're finding tariff evasion, and think about what's going to happen with China and the U.S. The West is some of their biggest markets. They're flooding markets all around the West with goods so that they can crush industries like the auto sector and others. And they've been doing this with solar and doing it with a bunch of different sectors, doing it with steel for years. But now their own sectors of these are collapsing. And we're going to be pushing massive amounts of tariffs and preventing them from being able to come into our country. And I posted this before and talked about it in one of the other videos. But even countries like Brazil, which are a part of BRICS, the B, right? Are putting tariffs on China for goods that are getting dumped, and Mexico is doing it, and Chile's doing it, and so even Central American countries, and I think Africa will follow too. There are well, probably not Africa, and actually Africa is pretty fucked. It's kind of a mess, and leaning towards China isn't helping them. But countries that have their own manufacturing or their own processing of minerals and stuff that are getting dumped on by China are like giving the middle finger. And they're doing that because Europe is going to be doing it more over the next couple of weeks and probably really leaning into tariffs, and China's going to fucking hate that. And the U.S. isn't going to let their cars come here. And so they're going to have to sell them cheap into other industries, and those 500 EV makers are going to collapse, and their real estate is collapsing still, and their construction is still collapsing because China, even with all the funding they're doing, is only picking up 2% of the new real estate that's been built over the last year as far as a funding cost. And even if they bring that into the state and start really turning communist and turning into Mao, it doesn't help. And so all the money printing in the world, their debt to GDP is almost 3x what ours is in the United States, and everybody worries about us. So do not talk Chinese stocks. I will not push people towards them. Baba is absurdly undervalued if they're a democratic country. Danny, I'm going to say that. I'm sorry, man. I know you guys want to invest in China. I know it looks cheap. I know when you compare it to US companies, they look cheap, but they're cheap for a fucking reason, because the threat of war is huge. And at the very least, none of these companies, you don't own any of these fucking companies. They're all just like based out of the Cayman Islands. And so you just own paper. And Russia recently has started seizing more American and Western, or I should say Western assets from companies like Germany and France, for companies that weren't even trying to sell. They just froze their fucking assets and said, oh, hey, you're us now. We own you. And so these are companies that weren't even, that were just playing nice with Russia, and they're still fucking them because of what their governments are doing. Imagine the downfall of China's economy if 2/3 of the world is at war with them economically because they've invaded Taiwan, or just because their economy is collapsing and they're trying to dump on the rest of the world through companies like Temu, where they're not even making money, but they're trying to crush companies like Amazon. And then now the U.S. government is cracking down on them. And if you think Biden is tough on them right now, which he is, think what Trump will fucking do. I mean, what he's threatened to do. So please don't invest in China. China is a fucking mess. Michael Pettis is literally based out of China, and he's talking about how China's whole economic model is not sustainable because of vastly inadequate domestic spending and a lack of investment opportunities. Well, this is Paul talking about it, but Michael's putting it out there, and he's not arguing against it. And then you have Chinese home prices dropping faster than Japan after its own bubble burst, and then they had their lost decades. There's GDP articles about GDP actually declining in China. There is so much fucking bad shit. This guy right here that I follow is talking about how their steel industry is collapsing. And he lives in China. He spends most of his time in Shanghai. He's one of the few Westerners that's still left, and he's still talking about stuff like this. So this isn't just like anti-Chinese propaganda. These are people that are here talking about how fucked this economy is.